Advance of Forex trading. These are the lessons under Advance of Forex trading. Types of charts. What is candlestick? Types of candlestick. Opening and closing price. So let's get started. Types of charts. We have three different types of charts. We have the line charts, we have the bar charts, and we have the candlestick charts. This is an example of the three types of charts we have. You can see line charts is a line. This is the olden days charts. So this is the kind of charts they use in the olden days. And also, if you watch CNN, you watch news online or on TV, you will notice they used to represent their charts with this. This is easier for the whole world to understand. So that's why they use this on TV and on blogs. So this is the second example, which is bar charts. And this is the latest of them all, which is the candlestick chart. So on your MT5 or MT4 app, you will see this kind of thing. When you go to the settings, you will see the bar chart, candlestick chart, line chart. So you can decide to set your chart to bar chart or candlestick chart or line charts. I prefer using candlestick chart, and please make sure you go to Play Store or App Store. Download MT4 or MT5 app on your phone so you can have access to see all these things. The MT4 or MT5 app is the app the whole world traders used to trade in the market. They use it to analyze the chart, to know when to buy or when to sell in the market. So make sure you download your MT4 or MT5 app on Play Store or App Store so you will have access and take advantage of the market. So you can see here, this is bar chart. So you can see this is bar charts, this is candlestick charts, and this is line charts. So the candlestick chart is the most popular chart in the world. So 90% of the world traders trade using this candlestick chart. So what is candlestick? A candlestick is a style of financial chart used to describe price movements of a security, derivative, or currency. Candlesticks are used by traders to determine possible price movements based on past patterns. Candlesticks are useful when trading as they show 4 price points, which is the open price, the close of the price, the high, and the low throughout the period of the time the trader specifies. So this is represented by the picture here. So you can see this is the two types of candlestick we have. We have the bullish candlestick and we have the bearish candlestick. So you can see this is the bullish candlestick and this is the bearish candlestick. I think you know what a bull is and you know what a bear is. Those two are animals. When a bull is angry and it's about to attack, let's say a man or any animal, we push the objects up, while a bear we pin the object down. So that's why we call it bullish candlestick. A bullish candlestick is when a price of a particular currency move from a lower point to a higher point, while a bear when a price of a particular currency move from a higher point to a lower point. The bull candlestick, the market open at the low, then closes here. So the low of the market is this point, while the high is this point. So for example, now let's say you are to buy a bag of rice. Let's use bag of rice as an example. The price this morning of that bag of rice is $10. So between the day, the price of that bag of rice went down to like $7. So the low is $7. After that, during the day, people started buying. There is high demand in the market and the market starts moving up. It now gets to a point where the price of that bag of rice gets to like $30. Don't forget, the opening price is $10, but now the price is at $30. So before the market closed, it went down to like $25. So the closing price for that day is $25, while the opening price is $10. But don't forget, the price also went down to like $7 before going up. It went up to $30. Now it's at $25. So you can see now the market is bullish. Let's assume this is a bull. Then it hits an object and push the object up. So from $10, the price of bag of rice for that day closes at $25. So why the next day the price opened at $25? But you know what? We now have a lot of people selling their bags of rice. Why we only have few people that are now buying? Because yesterday the price was $10, but now the price is at $25. So people now started selling. But before that, the price went up back to $30. People now started selling. So there is high supply than demand. So the price now went down to like maybe $7, then it now closes at $10 for that day. So this is a bullish candlestick, while this is a bearish candlestick. So types of candlestick: bullish candlestick, also known as bull candle, which is the green candle, or a buy candle. It is formed when a candlestick opens below and closes above, which is caused by high demand and low supply in the market. So there is high demand, a lot of people are buying around this level, they now push the market up to this level, but this was the high of that commodity for that day, and this is the low for that day. So this is a bullish candlestick. Why? A bearish candlestick, also known as bear candle, which is represented by a red color, red candle, or a sell candle. It is formed when a candlestick opens above and closes below, which is caused by high supply and low demand in the market. We now have a lot of people selling for that day. We have high supply than demand. People are no more demanding the particular commodity or products. So what will happen? The price will have to fall, it will have to go down. But for the day, this is the high for that day and this is the low. So this is the opening price and this is the closing price. So this is a bearish candlestick. You can see we have the bullish and we have the bearish candlestick. So this is an example of how the candlestick chart looks like. So you can see here we have a blue candlestick and a red candlestick. You can decide to change the color on your MT4 or MT5 platform to any color you want. So you can decide to make this, the bullish candlestick, to be green and the bearish candlestick to be red. You can decide to make the bullish candlestick to be black and the bearish candlestick to be pink. It depends on you. You can decide on your own the color you want. So you can see here this bullish candlestick is represented with a blue color. So the market opened, came down to this level, moved up to this level, then closes around this level for that day. Then the next day it opens here, went up to this level, moved down and closes here. The next day it opens, moved up, moved down, then closes here. The next day it opens here, move down, move up, then closes here. The next day it opens here, right, move down, move up, then closes here. So same thing. That is how the markets move. So this is how the markets move every day. Let's assume okay, this is Euro USD. 1 euro is equals 1.00750. So in how many days? 1 2 3 4 5 6 7 8 9 10 11 12 13 14. In 14 days the price of euro to United States dollar moved from this level to this level. So assuming you take a buy around this level, are you getting it? You would have made a lot of money from this level to this level, because we now have more bullish candlestick than bearish candlestick. So the blue is bullish while the red is bearish. So opening and closing price, the time frame can range from 1 minute to 1 month. The key points are opening price, high, low and closing price. The opening price is the first price of an asset in the current period. A high is the highest point of an asset in a particular time frame. A low is the lowest price of an asset in a certain time frame, while a closing price is a final price of an asset in the current period. This figure is most frequently used in analysis and is considered to be of the great importance. Display high, low, open and close price for a specific period. I've already explained this, that this is the opening price of this bullish candlestick and this is the closing price, right? But this is the low for the day, while this is the high for the day. Then the next day, this is the high, this is the low, while this is the open price and this is the closing price.